The average life settlement paid sellers $212,066. In 2025, nearly 9 times the policy's cash surrender value. That figure comes from the Life Insurance Settlement Association, or LISA, and its 2025 annual market data released in May of 2026. This video is educational. It is not financial, tax, or legal advice. Citizens Life Group is a licensed life settlement brokerage. It is not a life settlement provider and does not buy policies. Reviewed by Jeff Hallman, Florida License 0266. What follows is what that average actually means. The 5 things that move an offer up or down, why the first offer is rarely the best, 3 payout scenarios on a $500,000 policy, and how to tell whether an offer is fair. In 2025, the average life settlement paid sellers $212,066. That is nearly 9 times the average cash surrender value, which was $24,360. The precise multiple was about 8.7 times. These numbers come from the Life Insurance Settlement Association's 2025 annual market data, released under Executive Director Brian Nicholson. Citizens Life Group's review of that data shows the market paid consumers $626.6 million across 2,955 completed transactions, a 9.5% increase over the prior year. Sellers received $554.6 million more than they would have collected by surrendering those policies to the insurer. One figure in that report stands out. The average cash surrender value fell 27% in a single year, from $33,493 in 2024 to $24,360 in 2025, while settlement values held. The gap between selling and surrendering widened. Here's the catch. An average is a starting point, not a quote. The figure of specific policy commands moves a great deal based on the seller's age, health, and the policy itself. And that is what the rest of this video covers. Most offers fall between 10% and 50% of a policy's face value, not exactly 20%. Across the market, payouts tend to cluster around 20% of face value as a general rule of thumb, while Lisa's 2025 data shows the average payout was nearly 9 times the cash surrender value. The 20% figure is an industry observation, not a LISA statistic. Here's how the distribution generally looks. The cash surrender value the insurer pays runs only about 3 to 5% of face value. A low-end life settlement offer tends to land around 10 to 12%. The middle of the market sits around 15 to 25%, which is where the rough 20% rule of thumb comes from. High-end offers reach 35 to 50% of face value. Where a given policy lands depends mostly on age and health. A healthier 68-year-old generally sits near the bottom of that range because the buyer expects to pay premiums for many years before the policy pays out. An 82-year-old with a serious change in health generally sits near the top. The same face value can produce very different offers for 2 different people. Age, health, face value, policy type, and premium cost are the 5 factors buyers weigh most. Each one changes the present value of a future death benefit, which is what a buyer is really pricing. Age comes first. Buyers generally look for an insured who is 65 or older, and offers tend to climb for insured 75 and up. This is present value mathematics, not a judgment about anyone's worth. The closer a policy is to paying out, the less time a buyer waits and pays premiums. Health is second, and it drives life expectancy underwriting. Buyers order life expectancy reports from firms such as AVS Underwriting, ITM 21st, and Fasano Associates. Conditions such as diabetes, chronic obstructive pulmonary disease, cardiovascular disease, kidney disease, a cancer history, or cognitive decline shorten the estimated life expectancy and tend to raise offers. Third is face value. Policies generally need at least $100,000 in face value to attract buyers, and the band above $250,000 usually draws the most competitive bidding. Fourth is policy type. Universal life and whole life dominate the secondary market. A convertible term policy can qualify once it is converted to permanent coverage under its conversion privilege. Fifth is premium cost. The buyer pays every future premium, so a policy with a low premium relative to its death benefit is worth more to that buyer. The lowest and highest bid on the same policy often differ by 30 to 60%. That spread is one of the most important things a seller can understand, and it is treated here as a general industry observation rather than a fixed figure. When a policy is shopped to multiple institutional buyers, the offers can land far apart. Different buyers use different life expectancy reports, different return targets, and different portfolio needs, so one buyer's number can be much higher than another's for the very same policy. A single offer, taken alone, tells a seller almost nothing about where it sits in that range. This is where the law matters. Under the NCOIL Life Settlements Model Act, amended in November 2024, and under state statutes including Florida statutes, Chapter 626, every offer received must be disclosed. A licensed life settlement broker owes a fiduciary duty to the seller and is required to disclose each offer. So if a seller is handed one number with no record of the other bids that were solicited, that is a reason to slow down and ask questions. On a $500,000 policy, offers typically run from about $50,000 to $250,000 depending on age and health. These are typical market ranges, not promises, and every policy is priced individually. Consider three sellers, each holding the same $500,000 universal life policy. In the first scenario, a 72-year-old in good health. Offers on a policy like this typically cluster around $50,000 to $75,000, roughly 10 to 15% of face value. Surrendering the same policy to the insurer would typically pay $15,000 to $25,000. In the second scenario, a 78-year-old with a heart condition and type 2 diabetes. Offers in this situation have generally run $100,000 to $150,000, roughly 20 to 30% of face value against that same $15,000 to $25,000 surrender value. In the third scenario, an 82-year-old with a significant decline in health. Offers have generally reached $175,000 to $250,000 or more, roughly 35 to 50% of face value. The surrender value has not changed. The pattern is consistent. As age rises and health declines, the settlement value climbs, while the surrender value the insurer offers stays flat and low. Working with a licensed broker who shops the policy to multiple buyers raises offers more than any other single step. Here are 6 levers that tend to move an offer up. First, work with a licensed life settlement broker rather than a single direct buyer. A broker owes the seller a statutory fiduciary duty to act in the seller's best interest. A direct buyer represents itself. Second, require multiple competitive bids. A policy shopped to many institutional buyers reveals its real market value in a way a single offer never can. Third, provide complete and accurate medical records. When buyers can see the full picture, they price on the facts. When records are thin, buyers tend to price defensively, which lowers offers. Fourth, if the policy is a term policy with a conversion privilege, convert it to permanent coverage before selling. Most buyers will not bid on term coverage that cannot be converted. Fifth, do not accept the first offer before the bidding round is closed. Early offers are often not the highest. Sixth, verify the broker's license and ask for the written fiduciary disclosure in advance. In Florida, a license can be checked through the Florida Department of Financial Services licensee search, and the broker's fiduciary duty is set out in Florida statutes, Section 626, 9911. One point to be clear about. That fiduciary duty is owed to the seller, not the buyer, by the licensed broker or brokerage that handles the transaction. A direct buyer represents itself and owes the seller no such duty. A fair life settlement offer is almost always at least 3 times the policy's cash surrender value. That is the first of 5 practical tests. First, compare the offer to the cash surrender value. If it is not meaningfully above what the insurer would pay to surrender, it deserves scrutiny. Second, compare the offer across multiple buyers because one number in isolation means little. Third, check the offer as a percentage of face value against the typical ranges for the seller's age and health. Fourth, be cautious about a single outlier high bid that no other buyer comes close to, and ask why. Fifth, confirm the rescission period in writing before signing anything. A few words on what to expect. A typical life settlement runs 60 to 90 days from application to payout, with medical underwriting usually the longest step. Rules from the National Association of Insurance Commissioners, the NAIC, treat that range as a typical time frame, not a promise. Proceeds can be partially taxable under Internal Revenue Service, Revenue Ruling 2020-05, and the framework set by the Tax Cuts and Jobs Act of 2017, so a tax professional should be consulted. Proceeds can also affect Medicaid and other need-based government benefits, which is worth checking before a sale. A settlement is one option among several. The alternatives include surrendering the policy, letting it lapse, a 1035 exchange into another policy, an accelerated death benefit if the insured qualifies, a policy loan, and reduced paid-up coverage. A licensed broker is required in most states to inform the seller of these alternatives. The rescission window varies by state and generally runs 15 to 30 days. In Florida, it is 15 days after the seller receives the proceeds under Florida statutes section 626-9924. If a senior wants a sense of the number, a policy can be reviewed against current market data in about 3 minutes, with no obligation. To recap, the average life settlement in 2025 paid sellers $212,066, nearly 9 times the average cash surrender value, according to the Life Insurance Settlement Association's 2025 annual market data. The figure a specific policy commands depends on age, health, face value, policy type, premium cost, and how many buyers compete for it. The right to sell a life insurance policy is long settled. The United States Supreme Court affirmed it in Grigsby v. Russell in 1911, holding that a life insurance policy is property the owner may sell. This video was reviewed by Jeff Hallman of Florida Licensed Life Settlement Broker, License 0266, who has worked in the secondary market since 1999. This has been an educational overview, not financial tax or legal advice. A licensed professional should be consulted before any decision about a specific policy.